Now, the next thing that we want to discuss in this is the component basis of recognition. So sometimes we buy asset which has multiple components. So what is a component? Because the property, plant and equipment, the depreciation is charged on the property, plant and equipment based on their useful life of the asset. So if the asset has a 5 year useful life, then we will charge depreciation based on 5 years. If the, let's say we use a simple method of straight line depreciation, right? So in that case, it would be just only 5 years. If the life of the asset is 10 years, then we will charge that in 10 years. If the life is 20 years, we will charge in 20 years. Sometimes there are assets which we buy which has components which are different from the useful life on in each other. These are mostly the complex assets, not like just normal laptop or just normal table, chair. Those ones, all the components are either the component like individual component like nut bolts have no significant value and they cannot be used separately. So they are always treated as one asset. But there are sometimes the assets, let's say, for example, you buy a big air con unit, correct, into the building. Now that that particular asset is so huge and it has multiple components. It will have a fan coil unit, it will have a plumbing, it will have the the water lines, it will have also the duct lines, it will have also have the electrical panels or control panels. So it's a combination of multiple assets, and all of these assets are separate from each other. They can be used independently. So it's not like the asset cannot be used without the other. Of course, it cannot be used without the other, but you can use the asset somewhere else as well, right? And they are standalone in their own sense that they are complete asset. So the electrical panel will be complete asset. Fan coil unit is a complete asset. Duct is a complete asset. Um, the chiller water lines are complete asset, or chiller water plant is a complete asset. But they all have different lives, right? They duct lines can be there in the building for like 10 years. Fan coil units usually go up to 5 years. The chiller water pipes can go up to as like 15 years. The plumbing or the electrical wiring that goes into the building can go as long as 20 years. So they have different life in their own components. So if you charge everything at 10 year, those some assets which are like 15 years life will be charged higher depreciation because of the that we are setting a individual asset. And if we charge everything at 20 years, then those some assets will be gone out of service in 5 years, right? And you have to replace them. So what you will do, you will have to add again to the new replacement, and the value of the property is just blowing up, right? So that's why we the accounting standard recommends to have a component basis of recognition. So means that we need to really split out the assets, the big assets, not the small assets, the big assets, into different components which are can be used separately. That's one recognition, one criteria. Second criteria is that the useful life of that component has to be different. So that will help in adjusting the subsequent cost of the property, plant, and equipment as well. Um, so, so that's the component basis of recognition. Then there is a subsequent cost of property, plant, and equipment. So, what is the subsequent cost of property, plant, and equipment? Usually, we spend money on the regular upkeep of the asset, just a normal like cleaning, overhauling, regular maintenance, changing the oil, or some touch up, repainting. Those are normal upkeep of the asset, which we and they does not increase the life of the asset, useful life of the asset. They just maintain the useful life of the asset. In that case, that amount will go to the profit and loss statement. But if there is any spend which is, let's say, sometimes we do as a part of the property, plant, and equipments, we are replacing certain parts to increase the life of the, so that usually has to increase the life, useful life of the asset. Then in that case, we can put that into the capitalized. So we can put into the property, plant, and equipments. But we also have to remember that if we are, let's say, taking out certain components of the asset and we are replacing something else to increase the value or to increase the life of the plant, then we have to also take out the old value of the component. So that's why another reason why we need to have a component basis of recognition. So you need to know the component value so that you can say this particular component will be replaced after 5 years. So I need to know the value of this so that after 5 years, when this is gone out of service, I have a new asset which I need to capitalize. We will be able to remove the value of the old asset which is gone, and we are now adding the value of the new asset which has just come up as a new component, add it into the big complex machine. So the big complex machine can be out of service only when the biggest component is gone. Otherwise, the small components will keep on changing. You can change the motor, you can change the fan coils, you can change the other duct lines or other electronic panels and pressure pumps and chiller areas or God knows what, right? So you can change the component of the asset. So that's why the component basis of recognition is required for two purposes. One is the depreciation purposes. Another is the subsequent change or replacement of the property, plant, and equipment.